Hi guys, it's Dayo again with another video. Today we are going to be doing a top-down analysis. I'm going to be clarifying what happened in the previous market, what happened last week. Um According to last week, we were expecting according to our analysis, we were expecting price to tap on this other block, just tap on this other block, then fly to the upside. But the market decided to tap into this other block, go up and turn it into an inducement. After turning it into an inducement, then it came down. When it turned it into an inducement, it came down to tap into an other block over here. Instead of tapping into this other block, it came to that. Sometimes um we need to understand something. Whenever markets refuses to break the higher high, whenever a market refuses to break a higher high, which is this, in this case it refuses to break this high, then went downwards to break this low, which is considered to be our market's structure shift or our change of character. As of last week, I thought probably it wants to use this trend this trend as an inducement, or it wants to take out this liquidity then go to the upside, because sometimes the market behaves in a way that you think that it's going to break, is going to change character, then it will continue to the upside. So I was expecting price to take out all this trend line liquidity. After taking out this trend line liquidity, then go to the um upside. So I was waiting for like a reversal, not knowing that it has already changed trend. So you need to watch the market closely and look at what it's doing at the moment. So since it refuses to break this high and went down to the downside to break this low, um to break this low, making a change of character. So now if we are going to be identifying our change of character, it's going to be, our change of character um will be around this place, this is our change of character. So after it has changed character over here, which is our church, then it went to the upside to, so it changed character, then went to the upside to take out this trend line liquidity, this liquidity over here. This is our inducement. This place is our inducement. This place I I identify as our inducement. As you can see, it was trying to form a trend line liquidity. It was trying to form a trend line liquidity, then it got taken out. So after it got taken out, this is our inducement, IND. So this is our inducement. Took out our inducement, then went up to this other block to tap into this other block. It tapped into this other block, then fell down to the downside, fell down. Thereby, when it fell down, it broke structure again, broke structure, over here. So this is what the market did. So it broke structure over here. This is our BOS. So what we are expecting the market to do next is, we are expecting the market to reverse after breaking this structure. We are expecting the market to reverse from here, at least probably make some play around, at least play around, play around before tapping into um probably a fair value gap over here. There's a fair value gap over here, then dumps down to the downside. It might not go straight, but it might decide to do like this. Then down. So this is what we are expecting the market to do. Then still go up and go down again. So we are expecting the market to do exactly like this. We are expecting the market to do this. So this is my outlook for next week, this new week. So we're expecting the market to tap into a possible fair value gap over here. As you can see, there's a fair value gap over here. Expecting it to tap into this, then dump down into the downside. So it can tap into this, it can decide to even go to tap into another fair value gap over here. I'm coming. And decide to tap into another fair value gap, and decide to tap into this fair value gap. Let me go to the 15 minutes and see. Yes, so it might decide to come to this place. Already this fair value gap has been mitigated, but it might decide to go to this, probably this other. I'm coming. Let me go to probably 45 minutes to see something. Trying to see something. Yes, so there's a fair value gap over here, as you can see, even though it's somehow mitigated halfway, but the market is unpredictable, so there's a possibility that it's going to tap into this, or it's going to tap into this or this. So our RTO, let's see, our RTO is actually dependent on where the reversal is going to take place. So in after Asian high or Asian low has been swiped, we are going to determine whether the RTO or our POI is going to be from this place or from this place. But for now, let's say this is our low, and this is our high. So if you want to determine a valid POI, I think you should try using your Fibonacci, then drag it to the downside to the end. Then as you can see, this is our valid POI, or our valid RTO, return to origin, is mostly found around 0.786 or 0.71. So any orders that are going to be here are going to be rejecting to the downside. So whenever price comes to this place, as far as it has exceeded 0.5, sometimes I'm going to make videos on how RTO works, how POI works, and how to get your valid POIs. There are different types of POIs, RTOs. There are RTOs based on supply and demand, and there are RTOs based on support and resistance. So I'm going to explain that in my future videos. So if this video was helpful, do well to subscribe and smash the like button, and if you have any question, do well to let me know in the comment section, and I'll see you in my next video. Peace.